Welcome everybody to the Chinchilla Pickin' Podcast. It is October the 19th, 2025 at 4:08 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the Baron de Bonds himself, Brandon Beaver. Brandon, what's up?
My microphone is now deteriorated to the point of where it has no legs whatsoever.
I failed. I failed in my promise of getting you a new microphone. I apologize.
So if you talk about all of the episodes we've had, this is like official episode 216 or something like that, but we probably
Yeah.
had like 230 because we got a couple lost episodes, we got a couple of specials mixed in there.
Yeah.
This microphone has lasted probably around 230 weeks. What is that? That's like
That's
4
that's
years
a few
somewhere.
years. Yeah, it's a few
Yeah,
years.
that's since the beginning of the show. Um, but it has been slowly deteriorating over the past few weeks, now to the point where it is just
Well, I want to say, look,
functionally ticking.
if you can't see, look at mine right now. You can see it's like right here. This is where my lovely daughter, who I love with all my heart, has dropped it multiple times, and that's a dent in my microphone. And it still works. It gets loose from time to time, and I gotta tighten it because she dropped it as well there. Yes, microphones do wear out and
So
break.
I thought yours was like one of those professional mics. Some of those have like a purposeful dent in them for
Yeah,
audio
well,
quality. But
that's what I'm gonna say going forward. But no, this was done. This was dropped. This was dropped and dented. So yeah.
oh man.
Now,
So
hey,
so
I had a
it's
friend.
weird to me
Oh, go ahead.
that like I don't know. Just yesterday, when this podcast started, Layla was 6 years old, and now somehow she's almost a doctor.
It's well, hold on. You've known me since she was just like what? I think two
Yeah,
years old when you first
yeah,
met me.
yeah.
So I've told you stories about her growing up over all these years, and you're just like, she's going to be a doctor? Like, how old am I? I get it. I feel the same way. I
Well,
feel the
my
same way.
doctor that I've had since he was a kid just retired, so I'm in the market.
Yeah, she's going to be a neurologist, so maybe you might need one. Who knows?
Yeah, I could use one of those every day.
Yeah, hey, by the way, I was told by a friend right before we got on camera here to have fun. So
Okay,
we have to have fun now.
yeah.
I
I
don't
could
know.
have used a neurologist when I was diving deep into the Chinese stocks a few years ago.
You
They
could
could
have,
have helped
dude.
me.
You went way deep. I thought you were about to move to Shanghai. Yeah, they go over there, go, ni hao. If you don't know, that's actually the proper way to say hello, and its pronunciation is key. You could learn that ni hao is hello, but if you don't go ni hao, you don't have the proper pronunciation, it won't sound right. And I think I'm probably screwing it up right now too. I have no idea. I'm
Okay.
not good at my Mandarin and I only know a few words.
Yeah, well, I mean, I don't want to try it because I will sound super racist because it will be terrible.
I
So
am
I'm not gonna try.
yes, I am much better at Spanish. I can have small conversations in Spanish, and I am trying to pick up French. I know some words of like, hey, where's this? Where's that? How do I get here? Yada yada yada. And I bet you if I went to France again, because I've been to France a number of times recently, they would again tell me how awful my French is and say just speak English, like they do every time.
I've been to roughly a dozen countries and I've learned zero foreign language skills whatsoever. And my goal is to constantly be that stereotypical American traveler that wants everything to be about him. That's my goal.
Yeah, well, there you go. Well, I mean, like I said, my next overseas trip is Zermatt, Switzerland. They speak a lot of English.
That's really
Switzerland's a
good.
very what's the word I want to get? They get a lot of visitors from outside Switzerland, so they all typically you can find someone that speaks whatever language you're looking for
Yeah.
in
My
Switzerland.
attitude, look, I've spent a lot of money to come visit your country. What can you do for me?
Wow. Wow, arrogance at its best right there, everybody.
So show
Arrogance
me
at its
where your
best.
Arc de Triomphe is.
Arc Day Triumph. That is awful. Why am I? That's not even funny. All right, that is awful. All right, moving on. There
Don't
was a
ask
lot of
me.
stuff.
Like, don't give me dirty looks if I'm in Belgium and I ask where the waffles are, or if I'm in Brussels and I tell you to show me your best sprouts.
Sprouts. Wow. Stop now before the whole show just gets canceled. Stop it. All right. Stock and investment news. There
Yeah,
was
that
a
happened, by
whole.
the way. I was in Brussels
I'm
and I
sure
went
it
up there.
did.
Yeah, it was with my
Yeah,
buddy.
but when you were in Brussels, that was a long time ago. That was like 15 years ago,
Excuse me,
man.
sir. Where are all your sprouts?
That was a
And the guy that
long
I was
time ago when you were
traveling
in
with was like,
Brussels.
"I don't know you. I don't know
The
you, man."
last time I was in Netherlands, I was just a kid. Like, yeah,
I
it's
couldn't
been a
get.
minute.
I couldn't. So I was in London, and then we went to Brussels. I couldn't get all my clothes back into my briefcase or my luggage. I couldn't get it all back into my luggage, so I just used a trash bag to haul all my clothes around. It was the greatest thing ever. I was on the Euro rail with a big trash bag and then an empty suitcase because I
I
couldn't get
mean,
my clothes in it.
I have nothing to say to that. I have nothing to say to that. I'm sorry, Brandon, but I'm moving on. I'm
Yeah.
pushing this train
Okay.
forward here.
Here, I'll be the bigger person. I'm sorry, world.
Thank you. Thank you. Moving on, as I keep trying to do here in this train is off the tracks podcast here. There was a lot of news, earning news last week, a lot of banking news. The markets were up, they were down. It was a mess. There was the current administration making comments on social media, China making comments on social media. It was a mess all around. The comments were pushing the narrative on the markets, and I have no idea why some companies were down, some companies were up. All I know is that when companies go down and you can't find a single reason why, and you've done your research, that's a buying opportunity if you believe in
Yeah.
that company.
Yeah.
Because
That's
then they're going down because somebody made a comment somewhere else, but it has nothing to do with this company that you're looking at.
Yeah, especially the big, companies in the S&P 500 that are owned institutional, and when those institutions start indiscriminately selling off to reduce their exposure to risk, they drive down companies that oftentimes don't deserve it.
Exactly. Exactly. But we have a lot to get into. We have a lot of meat for the show, so let's go ahead and get into it. Yes, rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live back and forth right here on the show for you. The bicker and the banter. I forgot that. The bicker and the banter right here on the show for you. We haven't bickered in a while, except about Bitcoin. That's the only thing we
Yeah.
bicker about anymore
Yeah.
because it's a safe haven.
Can I give some travel advice real quick? When you're in
Yes.
Paris, make sure you go to all the top-notch restaurants, and it doesn't matter what meal you order, ask for ketchup.
No, this is stop. All right, moving on. Stop. Uh, here we go. I'm going to start off. Brandon and I know we're throwing everybody off here. David started instead of Brandon, so
Well,
David,
when they
take it
come
away.
up to you and they're like, "Hey, sir, you ordered a Caesar salad. Are you sure you want ketchup?"
Don't even try the wee French. Stop. You you need to stop where you're at right now, man. Come on. Let's do this.
Okay, I'm good.
All right, here we go. I want to talk about something. This was a question that was asked to me this past week, and I didn't quite have all the answers for this person. And the question that was asked to me was, where are we at with auto loans currently? They saw some headline somewhere, they had a concern, they wanted to hear from myself, from Brandon, where are we at with auto loans and what's going on in there. They saw a headline that said it's in bad shape. So I got some stats for you, and then I pulled up an article I feel that explains it well, and then it's going to transition into something to the banks. All right. So auto loans, to answer the initial question is where are we at? Let me give you some numbers. So for Q2 of 2025, 5% of all auto loans were severely delinquent, which is close to the highest peak ever of 5.3% seen in Q4 of 2010.
Okay. Okay, so yeah, no, so normally when people say stuff like that, it's the closest to the peak that it's been since 2019 or something like that. And I don't care because what was the significant event in 2019? But you're saying 2010,
Yes.
obviously that's a problem. Um,
Well, hold on. That's not even the only number. You ready?
yeah,
Yes. In Q1 of 2025, the 60 plus day delinquency rate was 1.4%. That's the highest Q1 rate ever recorded, surpassing even 2009 figures. Delinquency was higher for used car loans at 1.9% during that time than for new car loans at 0.6%. In subprime, in January 2025, the subprime 60 plus day delinquency rate reached 6.6%, the highest since tracking began in 1994. In early of 2025, subprime delinquency rates were over 6%, while prime borrowers had a much lower rate of 0.39%. So in prime, let's talk about prime. Early 2025, prime and near prime borrowers have been missing payments at a faster rate than subprime consumers, signaling a wider financial stress. This is a reversal of previous trends as lenders tighten financial financing for the riskiest borrowers. So those are the numbers I pulled. Now go ahead.
I mean it makes sense with high inflation. I mean you're gonna default on your car loans hopefully before you do on your home loans.
But at the
The
highest
first
rate
thing.
ever since we started tracking this in 1994.
But high inflation's, the past 4 years, the highest that we've seen increase in inflation since the 1970s. So
Yeah.
and
Okay.
people
Yeah,
are
that's true.
struggling when it comes to that. What's weird is that there's so many different things in the economy right now that are pointing to different, different indicators that are pointing in different directions. This is one of the ones that's a bearish indicator.
It's a very bearish
Yeah,
indicator, and you see a lot of job cuts going on recently, and a lot of companies are saying that these job cuts are due to consolidation or AI, and a lot of them are due to AI and consolidation.
absolutely.
And AI is taking a lot of jobs away. And after, I mean, we're going to see a cycle of AI take jobs, but then eventually we're going to see on the other end is AI create some jobs.
Yes, absolutely. Because it'll be a
But
new cycle. Yeah,
But there's going to be a space in between where these people who lost their jobs don't have a job.
it's going to be painful.
And
But
and I
But
go
I tell
ahead.
you what shows me, like to me, that shows me this is the impact of artificial intelligence is the fact that corporate profitability across the board is up.
Yes.
Efficiency is getting better. Earnings, 86% of the companies that have reported in the S&P 500 so far this quarter have beat expectations. Revenue's up 6.6% on
Yeah,
average for the
efficiency
S&P
among
500.
companies. Yeah,
It's
efficiency among
artificial
companies.
intelligence, but we're seeing the weaker labor market. There's upsides to that too, though. It's disinflationary. It's helping to keep a lid on inflation, and it's probably the only reason why the Federal Reserve was able to raise interest rates back in September.
Well, you mean lower interest rates?
Lower them. That's what I meant to
Yes.
say. Yes.
So let me talk about specifically inflation and auto market and auto loans because that was the question, right? And inflation does play a part in this here. So I have an article I pulled up which I like. I read a number of articles on this, by the way. I didn't just pick up the first one that popped up on my on a Google search or something. I read a few different articles, and I believe this one covers it the best way, is how I put it. So I don't just pull these articles out of nowhere that I quote on the show here. But this one, the headline reads K-shaped cars. New vehicle prices top $50,000 while auto loan delinquencies keep rising. This one came out on Monday, October 13th. This was written by Michael Wayland and it was on CNBC. And I like the way he wrote this article. So in there, he's talking about a K-shaped economy. And if you don't know what I'm talking about, that's where you have one group going one way and another group going another way. And this is in regards to auto loans specifically, is what this is talking about. The average price paid for a new vehicle last month topped 50,000 for the first time ever, according to
Ooh.
Kelley Blue Book. Meanwhile, auto loan delinquency rates remain near all-time highs for those with low credit ratings. That's a problem out there. That means the price of cars is going higher, Interest rates are going up for subprime borrowers, and they're being delinquent on their car payments. Not a good overall shape for the economy here.
Well, I mean, that's still, and that makes sense too with all the tariffs on steel and aluminum and tariffs on vehicles that have been passed. Of course, the prices on those are going to have to go up.
Right. Well, and here's where inflation and everything comes into play is the average new auto loan rate was about 9%, as of the most recent data from August, according to Cox Automotive's dealer track. That includes rates of 18 to 20% for subprime or deep subprime consumers. Can you imagine having a 20% loan interest rate on a car loan? Now, I have had that before when Brandon knew me when I was in my broke poor stage and I had to get a car. I paid like a 24% car interest rate on a car, and that was half my payment was just for the interest. If I had like a 6% rate, you could have cut like $200 a month off my car payment and saved me a lot of money and made my life tremendously better during that time. But that's out that people are paying that right now on a $50,000 car, Brandon. That means people are paying over $1,000 a month for a car payment. Edmunds earlier this month reported the share of buyers committing to a monthly payment of $1,000 or more accounted for 19% of all financed new car transactions in the third quarter. The previous record ever set was at 19.3%.
Wow.
So this is where we're at as far as records go with auto loans and they believe some of this had to do with people trying to get EVs in September before the tax credit disappeared. That's part of it.
Okay.
But I mean, that's that's not a good sign. If you had years of inflation, so now your paycheck's paying for less, you have less discretionary money to buy stuff. Your paycheck can't cover as much as it used to. And now you got these huge car payments that you're paying on top of it. And student loans started back up this past year. A lot of people are making their student loan payments again or defaulting on those. Um, yeah, your credit score is getting just hit across the board here. If you're not budgeting correctly and doing the right things, you could be in bad shape right now, and that's not good for anybody, especially this U.S. economy.
Yeah. Well, we have to kind of fit this into the narrative a little bit here because looking at Q3 earnings so far, people are spending a lot of money on travel. I mean, Carnival Cruise Lines just had a pretty good quarter. United Airlines is guiding for the best quarter that they've had in company history for the next quarter.
A lot of
I,
people are traveling, but a lot of people are traveling on credit cards.
they are. I mean, but the
They're going in debt in order to have the
but
Instagram or TikTok life that they see or they
you
post
think
about.
so? I don't know if that's the case for everybody. I think that's a small subset group of the
You think that's a
population. I
small
mean,
subset? All right. All of our listeners, we have thousands of listeners. All of you guys, I want you guys to DM us and let us know if you believe that's a small subset or if you believe that you think that's like, and here's where I would define not a small subset. If that makes up that people using credit cards to travel make up 20% or more, that's not a small subset because
okay,
that's one out of every five.
yeah.
20% or more is where I draw the line. And I believe
Well,
it's
I mean,
20% or more using credit.
another one of the companies I'm going to highlight here in a minute. American Express had a great quarter. That makes sense then.
Well, what about the pay as you go, the Klarna? You could use Klarna or some of these Affirm or whatever in order to book travel. I could do a Disney cruise and use Affirm to make payments on it. It's that's where we're at nowadays. People are going in debt in order to travel, and I don't get it because I have a trip coming up, right? So I'll use me as an example. I have a trip coming up, and I'm paying cash for everything. I'm not going in debt over this. I'm not using credit cards to pay for my trip. This is just, and I don't understand people who go in debt in order to get you can't afford that trip. Why are you taking that?
I don't get it either. And I've never had, well, I haven't had a car loan since I was 22. Ever
Uh,
since then, every car that I've had, I've just paid in cash. Now, granted, I'm driving a 97 Camry.
Yeah, you haven't bought a car since
But
you're
I
a
bought
teenager.
it, but I bought it and had 30 some thousand miles on it, and I spent 5 grand on it in cash. No, as soon as I saw it, it's just that's it.
Right?
Um, but no, I couldn't imagine doing it for debt either. The weirder thing about it, though, is that people are not doing this for consumer discretionary items, the everyday items.
Groceries. Use credit card
I mean, it's
usage at like
expensive, but like they're not buying the discretionary groceries; they're only buying the staples.
right.
Consumer discretionary items are one of the laggards in the stock market right now.
Well, let me get into the banks because I think the banks have a lot to do with this. Let's see what they. So a lot of banks reported last week. I know you have some information on the banks. I have a little bit of information on the banks, and where they are seeing their increases tells a lot about where I think the U.S. economy is as a whole here. And I'm talking about U.S. banks. So JP Morgan was one of the banks that reported last week, right? JP Morgan Chase reported 16% increase in earnings to $5.07 per share, and the revenue rose 9% to $46 billion plus for the quarter, right?
Right.
So they had a great quarter. Consumer and community banking revenue came in at 19.47 billion. So they beat where they're expected to be by over 1 billion according to this year. And that's the difference in their earnings right there. Consumer and community banking. That's where the difference in revenue came in at. Commercial and investment banking also topped estimates, but not by as much as the other ones. And asset and wealth management revenue climbed as well. And that's actually across the board. So I'm going to go into other banks here, but before I do, every other bank I looked at across the board, fees for investment banking or family banking went up across the board.
Yeah.
All the banks raked in money from extra fees, and we're talking to the tune of something like some of these banks from 500 million to a billion to $2 billion in just extra fees, dude. That just irritates me to no end. Because if I'm investing and I'm allowing JP Morgan to handle my IRA or something, the fact that you're taking another $1 billion from your clients just in fees just irritates me.
Well, maybe, but also the IPO markets opened back up a little bit. And that counts towards investment banking fees too. So if they've made a little bit more money off the IPO market, then that's going to go higher. If we
Yeah,
get
don't get me
into
started on the IPO market this year. I still have shudders and PTSD from bullish.
if we wind up going into a rate cutting cycle, which we may have just started in September, um, and we're able to pick up the rate cuts, the IPO market will heat back up, and then J.P. Morgan and Goldman Sachs will go off the chain. So
Like they aren't
because of deal
already.
making, because of the
Yeah.
deal making.
Yeah, because $46 billion in one quarter is not enough. Um, JP Morgan on Monday announced a 10-year plan to facilitate 1.5 trillion in financing and investments for industries that are deemed critical to U.S. national economic security and resiliency.
Right.
They're going to invest up to 10 billion in various companies via direct equity and venture capital investments. This is due to the push by the United States current administration to not become so reliable on foreign minerals, products, and manufacturing. And this is what JP Morgan is doing to help facilitate that. Currently, they spend about $2 billion a year on AI, and the cost savings that they're having, Brandon, because of that 2 billion spent on AI is over $2 billion. They are having a net positive already from the money they are spending on AI, which is crazy that they spent 2 billion on AI and now they're making it's like 100 million, right? Not much,
Right.
but they're making like $100 million off that 2 billion they spent profit because
Sure.
they're making back like saving 2.1 billion in savings.
Yeah.
Already, already.
Right. Well, I tell you, in the same vein, the one company that I was gonna doing my review of the quarter three earnings that have happened up to this point, the one stock that should have went up that went down was Goldman Sachs, and I think it
Yes.
presents a buying opportunity here. And I mean, strong results across all of their financial metrics, it seemed. Um, Earnings per share was $12.25. That beat the estimate of $11.09. Revenue was up to $15.2 billion dollars. That was over the predicted $14.3 billion dollars. Huge investment banking quarter, grew 42% year over year. All right.
Yes.
Here's why the stock got hit. This was triggered by one line item. The operating expenses rose to $9.45 billion dollars, which missed the estimates of 8.98 billion. Now, here's the thing about this. The reason why operating expenses rose to $9.45 billion dollars is because of all of the bonuses and payouts that went to their investment bankers that were doing a really good job. So because they beat on that investment banking and they were up 42% year over year, their operating expenses went up, which the market should have expected, but for some reason it's down 6% for the week.
And all right. Why punish a company that actually pays out the bonuses they promised?
Right.
They're treating their employees right. Their employees hit the marks they set for them. They hit the goals they set for them. They actually paid out the bonus. I've worked for a company before, Brandon, that you and I both worked for at one point, and they could never explain how to achieve a bonus that we're
I
supposed to meant to
know.
get. They could never explain it. Then they never paid it out because they're like, well, it's complicated. That's what we heard back. We
I
heard back,
know.
you would not understand it. It's too complicated
Right.
for you. You're not smart enough to understand this. And it was so irritating. I hated that. And I was so furious with that. I almost wanted to sue them because of that. I almost sued them many times just
Yes.
because they
Well,
kept answering with, it's too complicated.
the bonus there was like the Yeti. I mean, people swore it existed, but nobody's ever actually seen one.
But, forget that a company actually, honors the bonus that they paid out to people. Come on. Goldman Sachs is doing a great job. They're going to continue doing a great job. That company's set. I mean, half of the SEC used to work at Goldman Sachs. Forget about insider trading at this point with them. And come on. It's a great company. It
Yeah.
is for if from now I will say it's a great company from an investment side. And from looking at it as an investment, as a safe place to put your money, it's a great company in that regard.
Yeah. And they had a 14.2% return on equity. Not bad.
That's come on.
Yeah.
That
I'm
I mean
buying Goldman Sachs probably tomorrow.
they're not Chinchilla Pickens return on equity, but
Yeah.
that's good enough.
Now, this is going to be the last company I buy for a while because I have 22 companies in my portfolio right now.
You have
So
way too many companies. I
I
have
do.
less than that,
I gotta
man.
trim down.
I am way more consolidated than you are, dude.
Yeah.
But you always get on me because of how much I put into one company.
Well, that depends, right? Like Charlie Munger famously only invested in like five companies.
Yeah, see?
That's so. I
I'm
mean, you
happy that you
got,
put me in the same group as Charlie Munger. I'll take that.
but I just get to my downside for stocks now. Like, and one of my weaknesses is that I get excited for turnarounds and I get excited about company stories. And when I see a positive company story trending in the right direction with the CEO that and management team that seems like I can trust, I get excited about it and I buy it, which is good. But at the same time, I'm a little. It's very hard to keep
You're
track of
too quick to
22.
pull the trigger and back up the truck.
It's 22 companies is really hard to keep track of, right?
See,
So,
when I get excited about a company, first of all, like I do my research, I've dug into it, I know everything about this company, like everything. I can tell you all their vice presidents and what have you, right? I know
right,
everything about the company. I'm excited. By the time I brought it to this podcast, I've already bought into it. I've
right,
already backed up the truck. I've loaded everything I have into this thing. Everybody's calling me crazy because I put quite a bit of money into it, and I'm just like, no, no, it's gonna turn out all right.
right.
And that's who I am, and everybody's like, that's just risky. I would never do that. And
Well, I'm not like
ninety
I don't.
percent of the time, it turns out good. I mean, Bullish was the only one in what the past few years that I've done this, and Bullish is the only one that turned out bad. So, you know, I don't know. We all have our ways of doing things, Brandon.
I don't purposely diversify. I've never really paid attention to diversifying, and I've always told people, "Hey, if you're concerned with diversifying, just buy SPY or QQQ, preferably both."
right?
and that's it. You know, the investing in individual stocks is about taking on that risk and assuming the high reward and high risk scenarios that each individual stocks brings with it.
And I
Uh,
love that stuff.
and if you're comfortable and you know what you're doing, then putting all of your money into just a handful of companies, it's not that bad of a deal.
It's not if you take the time to do the research for what we explain here on the show, and
Right,
we try to go into it every now and then of what we're looking for, what I'm looking at, why am I looking at this company, yada yada yada.
right.
All right, Brandon, what else you have? I have more stuff, but like, what else do you have? Because now we're gonna transition over to you, man.
Okay, well that's fine. I just American Express, they reported a good earnings. That's another winner on my table here.
Winner,
For
winner, chicken dinner.
Yeah, Taiwan Semiconductor, the best in my opinion. Just showing the strength and quality of artificial intelligence. 39% year over year increase in earnings per share, 30% increase in sales.
That's going to get even higher over the next few years. How many billions of dollars these companies? Think about it. If a financial company can invest $2 billion in AI and make profit off of that, everybody's going to be invested billions and billions and billions of dollars in this.
Yeah, and this company is always going to be at a discount to its peers because of the geopolitical concerns of the country that it, is in
Because
Taiwan.
Buffett pulled out of it. Buffett used to own it, and he pulled out of Taiwan.
Yes, he did. And they're going to be moving a lot of factories and stuff over here to the United States, which is a good thing, but that's going to affect revenue as well. But I mean, killer quarter, it just depends. Do you want to take the geopolitical risk with China or not? If you want to take it, cool. I'm cool with it. This is a great company. They've been great for decades.
I don't think
They,
moving some plants to the United States is going to kill revenue. It's going to kill bottom line number profit.
yeah, it'll be profitability, not
Yeah, the
revenue.
revenue is going to be strong no matter what. It's just gonna,
You're
yeah, the
correct.
bottom line.
You're correct. Absolutely correct. It'll be the bottom line that it gets hit on that. But yeah, if you want to take the risk on it, it's been a great company for decades. They make 67% of the world's semiconductors.
That's
I mean, so what
outrageous.
do you do? I
That
mean, this
is
is the most
outrageous.
the two most important companies in the world are Nvidia and Taiwan Semiconductor. And if there's ever a direct threat from China, as President Xi says there is, because he says that they're going to get Taiwan back, Taiwan Semiconductor is going to be a big player in it. You know what I mean? And not
It's
a good way.
yeah. I mean, the geopolitical tensions and risks involved in that whole mess is huge. And the fact that 67% of the world's chips are made by one company should scare a lot of people.
Yeah, I agree. I agree. But it also means that one company does a really good job.
That's yeah, right.
So,
They took majority of the share of the world's chip making.
yeah.
So yeah, they're
I
doing
mean, so you don't
fantastic at
you
what they
don't want to
do.
punish them for that, but you also, there's the China risk.
All right. Let me get into real quick talking about geopolitical risks. And since we're on that, I want to talk about this article I just uncovered. And I've talked in on here about natural gas, about oil, about why is the U.S. why were I thought we had a great relationship with India and Trump and Moody seem to be getting along just fine. If you don't know who Moody is, he's like the current Prime Minister of India or President of India. Um, Now, but India was buying Russian oil, and that was the problem. And that I covered that on the show. I covered it in detail, like what was the relationship? Why were we putting sanctions on India? We wanted them to stop buying Russian oil. They agreed to go ahead and scale back some of that. China still buys Russian oil. A lot of countries around the world still buy the Russian oil. That's still a big thing. So Russia, we're trying to sanction Russia. A lot of European countries are coming along on these sanctions, and we're it's cutting into the price and cost of oil because other countries are pumping up their output. Some countries, uh, Russia's still pumping out their output quite a bit, and they're still able to sell a lot of their oil through other means and other ways around the world because countries like India were taking advantage of cheap Russian oil because Russia needed to sell its oil to maintain some tax revenue coming in to fund what's going on, right?
Sure.
So go ahead.
No, you're good. I didn't have anything to say.
So I say all that just to go ahead and talk about this article that just popped up that came out today at 4:36 a.m. today, 10/19/2025, and the headline is Giant Russian Gas Plant Suspends Intake from Kazakhstan After Ukrainian Drone Strike. So this is talking about the Orenburg Gas Processing Plant. It's the largest facility of its kind in the world and has been forced to suspend its intake of gas from Kazakhstan. And I've covered what the gas and oil sales from Kazakhstan mean to those countries. I even spent a whole time on Kazakhstan, I believe, talking about how they want to diversify away from oil and natural gas and what their plans were for IT and technology and all these other issues that they have that they wanted to be part of, right? But right now, this is still their main source of income for those countries. So the had to be shut down. So Ukraine, which confirmed it hit the gas processing plant in the Orenburg region, an oil refinery in the Samara region, and it has stepped up its attacks on Russian refineries. Now, this is not Ukraine's first attempt. Ukraine has previously tried to strike oil refineries in the region before to no success. All of a sudden, now Ukraine is able to hit these refineries and start hitting them more often. What does that mean for oil in the broader market? That means the cheap Russian oil and gas that some of these other countries in Asia were getting is going to be at a standstill to halt for a little bit. They're going to have to buy it from other areas. So if they're buying it from other areas and they can't get that cheaper Russian gas, that means supply is now higher. I mean, supply is lower than demand. Demand goes up, supply has stayed the same. You're going to see a price increase come Monday morning on oil is what I'm expecting. A 1 to 5% increase somewhere in that range. I know that's a big range. You're like, Dave, that's a huge range to be given out for a jump in oil, but it's unclear of how long this is going to be shut down. First
More
thoughts, Brandon.
more earnings momentum for ExxonMobil.
Which still hasn't moved out of its range that I said it's been in forever, and I refuse to buy it again because I sat in that and made barely a percentage return on my money.
Eventually, I think it will. I mean, I think people were just expecting it to come down, but I mean, they just had one of the largest headline beats of the quarter so far. $112 billion of revenue. The
Still,
estimates of
still not
103.
above 120 a share though, and that's my complaint about Exxon. It's stayed between 110 and 120 for over a year now. Over a year.
We've seen companies do that. I mean, Amazon did it for a while. They stayed in a range. And what was that other tech company that you and I used to look at all the time and say, "Well, this never." Oh, it was Micron.
No,
And
Oracle.
eventually, it got out of that range. And then
No, Cisco.
Oracle,
Cisco.
Cisco, yeah, so Oracle went up
Cisco.
on.
Yeah,
Oracle had a
Cisco.
huge
Cisco went up as
increase.
well. Finally
Yeah,
broke out of
Oracle
that.
should
Yeah.
not have went up. They did not have a good quarter. This was all based on hopes and dreams and future promises of artificial intelligence, which
Hey, a lot of
I
things have been
get.
built on hopes and dreams, buddy.
I get how artificial intelligence been a great, contributor, but look, Oracle's not doing. They didn't have a great quarter,
Yeah.
and that's one of the stocks that should not have went
Anyway,
up.
trading
But
within
anyway,
range.
but I think, look, if you don't mind it, like you're gonna collect dividends. Exxon doesn't pay a low dividend. It's not incredible, but it's a decent dividend. You could sit there, collect the dividends until it does get out of the range, and I think eventually it will. Um,
I don't want to sit in that long. I'm not that patient. I'm good.
I mean,
I'm
they
good.
said, and that was another company that made a commentary on the market, by the way, in the economy, and they said that they had high seasonal demand. You don't get
Yeah,
high seasonal demand here. I get the exclusion of the Russian oil out of the market, but you don't get high seasonal demand from a recessionary environment.
but you can't exclude Russian oil out of the market. They're just not counting it in OPEC plus
Yeah,
amounts, and it's still pumping. So that means there's been a high supply that's been overreaching demand. That's why oil has come down in price over the last 12 months. If you look at a 12-month chart of price of cost of oil per barrel has come down because of this whole Russian-Ukraine war thing has we aren't including Russian oil into the equation, but it's still there and it's still pumping out and it's still selling. And so therefore we have an oversupply on the market right now.
sure.
And that's what's going on. And now with, the largest facility of natural gas in the area being shut down, and this goes back to natural gas is a big problem for Europe because they're trying to do the sanctions on Russia, which means they're buying it from the US, which means the US is shipping over tanker after tanker after tanker to Europe of liquefied natural gas, or LNG is what the acronym is that's used. All this LNG is coming over there, and I mean, I've looked for shippers who are shipping this. I can't narrow it down to which one. If you're listening right now and you can tell me which shipper has been really raking in the dollars, I thought it was going to be North Atlantic traders or tankers, and it's not. They're not making the money off this, even though their CEO is so bullish. He's buying his own stock every single month with his income. It's crazy, and they're not even the ones making money off this. I don't
Right.
know what tanker or shipping companies making the money off this, but somebody is, because the demand for U.S. Liquefied natural gas to go to Europe has been huge. Anyways, yeah, I'm looking for the markets for natural gas and oil to move to Monday morning right away, first thing.
Okay.
You ready for some earnings this week?
Well, let me get into the other companies just real quick, and I'll just
Real
quickly
quick,
go over them.
lightning
Okay,
round.
so I want to give Carnival Corporation a good shout out here. They
Oh,
refinanced $4.5 billion of debt, brought down their interest rate payments. Um, they've prepaid $700 million in debt
it's a
to get
dog.
that down. They still have very high debt. I'm
It's
not
a
going to
dog.
deny that. Look, wait, let me finish. Okay, so. They raised their full year 2025 adjusted net income by $235 million. They project an increase of nearly 55% compared to 2024 in sales. They're reporting a strong 2026 with more than half of their bookings already made for 2026 at historically high prices. That to me also doesn't say recession, but you're telling me that people are spending their credit card money on so maybe that's I don't know. We'll see what kind of sign this is for the economy. But they've restructured their debt, still very high. I'm not buying it right now, but they're heading in the right direction.
I'm not touching
So
Carnival with a 10-foot pole.
they customer deposits reached a new record high of $7.1 billion at the end of the quarter. Their return on invested capital reached 13% for the last 12 months. That's the highest level since 2007. So, I mean, I'm not touching it either. The cruise lines are too way too competitive. The travel industry is way too competitive for my taste. But they're doing a lot better. Management's doing a good job with the company, is what I'm saying right now. And
Oh,
so
is
I
it
wanted
one
to
of your
give them a sign
turnaround
up.
plays? Is this a
Yeah,
turnaround play?
no, I'm not going to buy it. I mean, people could, but I'm not going to. Contrast this with what I'm going to call the worst performer
Oh, the
from what
worst.
I've
Let's hear
seen so
this.
far. FedEx.
Okay, yeah.
3 consecutive quarters of lowering their full year guidance. They can't get this right. Management, your biggest job is to guide your business and to model your business and to project your business, and you're not doing it. You got 3 consecutive quarters of downgrading your own projections. You've got a problem. And then that erodes trust with shareholders because you don't know what you're investing in.
Yeah.
You don't know
And
what
it
you're
keeps
buying.
getting downgraded, so I mean they keep missing. So
Yeah.
why would I
So
want to
I mean,
invest in this
they
company?
had they had 2% revenue growth year over year. Meh. They beat consensus on that. Um, the earnings per share $4.51 that missed. Um, so they cut their full year guidance for earnings per share 3 straight times. They lowered their full year EPS forecast significantly. They shifted their range from $16.45 to $17.45 down to $15.15 and 15.75. That's a huge cut.
Yeah.
That to me tells me you have no idea.
Yeah.
So worst performer. Um,
Worst performer
Worst
from
performer.
Brandon.
The one company that should have not went up, another one was Liberty Energy. Significant miss, negative 0.06 cent, negative 6 cents a share earnings per share. This is a 200% miss. And for some reason, and I still haven't really done much research on this one, but the stock surged 20%. Um,
Okay.
Apparently, they had pumping efficiency go up or something. But it's a speculative stock there to show you
I
how
like speculative. Like my if I'm going into a speculative stock, it's usually a biopharmaceutical because I believe in the drug.
yeah, this one I think that like this just shows like these highly volatile speculative stocks and how shorting them can make sense to us, but then the market does the exact opposite for no apparent good reason.
The market can what's the term? What's the slogan out there? The market can stay irrational longer than you can stay solvent.
Yeah,
And that's an actual term out there and it's sometimes it's true.
yeah.
Sometimes it's just true.
Hey, do
But
you
if
remember?
go ahead. But like well no I'm going to interrupt you because the two billionaires who were battling each other over Herbalife. One of them, he still owns a short on Herbalife, and it's because it's not an option, it's not a derivative. He just shorted a stock, and so he
Yeah,
could remain solvent for years and years and years. And he's told them, I'm waiting for this stock to go down. I don't care.
okay.
Still owns it to this day, I believe.
As long as he doesn't get called on a margin call, which he probably won't
He's
be.
not
He's
on
a
margin.
billionaire.
Well, I mean,
Yeah,
he has the cash sitting in there to cover,
yeah.
so they can't.
Okay.
He's like, I'm holding this. He just hates that company that much. Crazy, crazy.
Wild.
All right, earnings this
Yeah,
week. Ready?
yeah.
Monday morning, Cleveland Cliffs. It's expected huge loss coming out of the company is what we expect. I want to see what they have to say about the Nippon Steel deal that went in effect earlier this year and how that's affecting their business. But that's one I'm looking at for Monday morning, Cleveland Cliffs. Tuesday, I have a huge list here for Tuesday, but it's all around really for it's all around one area. So before the bell on Tuesday, we have GE Aerospace, Halliburton, Lockheed Martin, and Northrop Grumman. If you know those companies, then you know what I'm going to be watching. It's all military spending and military aircraft spending, and I want to see where the money's going. Are they expecting a higher spending rate? I know Pete Hegseth, the current, um, what do we call him? Is he a Secretary General? I forget.
Secretary of State,
Yeah, I
maybe.
defense,
I don't know.
Secretary of Defense. He's the
There you go.
Secretary of Defense. He is reforming the U.S. military. I want to see what new contracts they have to say about it. Are they going to be rearming? Are they coming out with new airplanes? Are they buying more F-35s? What's going on? I want to know what's happening with all these companies and the military spending there. GM also reports also before the bell on Tuesday, so we can take a look at tariffs and see how it's affecting their numbers. The biggest one on Tuesday is Netflix by bar none. Everybody's expecting a huge result out of Netflix. K-pop Demon Hunters was a huge hit this past quarter.
Don't get it.
Everybody's, I know, right?
I
It's
don't.
huge. Everybody's expecting big numbers, but that's also can be a downfall for a company when it comes to earnings. Everybody suspects big numbers, and if you don't come out with a blockbuster number, then you kind of disappoint, even though you beat your own guidance. You could still disappoint. It's crazy that that's the way it is, but that's how high that bar has been set for Netflix. We'll see if they can get over that bar on Tuesday. On Wednesday, this is a stock that both Brandon and I both own, and we both is saying its praises on here. GE Vernova. I am not looking for a great quarter from GE Vernova right here. I'm looking for more contracts. I'm looking for flat movement in the stock. I'm not looking for a big jump up or big jump down. I am looking at future contracts. What deals are they signing? What's their guidance looking at going forward? If we're looking at previous quarter, I'm looking at just to remain flat, stay where you're at, that kind of business out of GE for Nova. A lot of companies are saying that is overbought. Some companies are saying there's still lots more room to grow. It's divided. It's 50-50 on GE Vernova. Brandon and I, we bought it a while ago. So for us, we're fine if it drops another $100 a share. We're still profitable. But if you didn't and you just bought it recently, then you're hoping for some really good guidance like we are to see some more growth in the stock. Thursday. Thursday is mining day. So I did a quick TikTok and Instagram reel on Newmont mining, and I gave Brandon all kinds of praise on it. I know he saw it. No, he didn't see it. He doesn't watch our own social media. But Newmont Mining, the expectations are high on Thursday, of course, for this. BlackRock has come out and said that Newmont Mining is in an excellent position. They have huge profit margins. They are doing fantastic because gold is over $4,000 an ounce, but they run their business based off gold being at 2,200 to 2,400 an ounce.
Yep.
That means all that extra space in between is profit. So
Yeah.
Newmont Mining.
Look, expectations are high for Newmont, but the valuation is not. The valuation has not followed that. So I mean, it's had a great run up this year, but the valuation is still semi compressed. I think you still got a good runway here on it.
There you go. More runway to go for
Yeah.
Newmont Mining from Brandon himself saying it's going to continue higher. Freeport McMoRan, another big miner, also reporting on Thursday, so you get to see those two miners. One company on Thursday that has nothing to do with mining, but it has to do with oil, Baker Hughes. I quote from Baker Hughes reports all the time on different oil rig counts and so on and so forth. I look at it weekly. They comes out the report every Wednesday. Baker Hughes reports on Thursday. Intel, lots of Intel's been in the news the past if you watch stocks at all the past 4 weeks, you've heard the name Intel every day on Bloomberg, CNBC, Cheddar, what have you. They report on Thursday. It's interesting to see what they're going to say in regards to all the news, in regards to the government buying a portion of Intel and what that looks like going forward. Are they going to get the government going to get involved in telling Intel what to do, or are they just a silent buyer? That's one thing to look at. Then lastly, on Friday, we have P&G, which is a good guide of the overall economy, and see how P&G reports on Friday.
Okay.
Yeah,
I like
Newmont Mine
that.
and Brandon, that's been a killer for you this year. Good call on that earlier
Thank
this
you.
year for our listeners. Great call. You deserve to take a ride around the park and get the cheers.
Who knew that a
So,
gold miner would perform similar to the Magnificent Seven?
right? Only
I mean, I
Brandon
did.
Beaver
I
would. Only
did. But
Brandon
who else
Beaver.
knew it? Who else knew it is what I'm
I
trying to
didn't.
say.
I bought Rio Tinto last year thinking that gold because I saw gold. I saw the movement in gold. If you listen to that podcast where I covered Rio Tinto and I said I was buying it, I saw the movement in gold happening. I called it out on that podcast.
Yeah.
This was last year, around actually before this time
Yeah.
last year. I think it was like August, September of last year. And I said, I'm buying Rio Tinto. I believe that the mining, you see it in here. You see gold moving higher. You see all the mining, all the minerals, blah, blah, blah. And I went into the detail on it. I said, gold's moving higher. Buy Rio Tinto. I was wrong on Rio Tinto, but I was right on gold moving higher. I just had the wrong company. You found the right
Understood.
company, Brandon. You found the
Yeah.
right company.
Thank you.
You're welcome. That's all I got for earnings coming out this week. A lot of earnings. Brandon, final thoughts before we go.
By Goldman on the expectation that we're in a soft landing and that this is the soft landing and that rate cuts are coming because I think they are. I think more are coming. And if that happens and the economy could stay in the soft landing mode, the IPO market will open back up. Market opens back up. Goldman gets more investment banking fees, and I think it's already at a decent valuation. The 6% drop in the stock is not warranted. I'm a buyer.
All right. I see Europe economy taking a hit. I see China's economy taking a hit. I believe the U.S. economy is not as resilient as everybody believes. I think it's built up on credit. I see that possibly taking a hit as well. Because of that, I think that off balances the Russian natural gas facility going down. I believe oil will do its move next week higher off the news of the facility going down. But overall, I believe we're going to have a slower economy. Here you go.
Yeah.
Finally.
Okay.
I'm finally saying
You
this
might, I
after all
mean,
this time.
but is it a
I'm,
soft landing? Are we going to have
I,
a mild recession, or what are you thinking?
I'm
Because
I'm turning
we kind of
bearish. I'm
flip
turning
flopping.
bearish on the economy, Brandon.
Okay.
This
All
hasn't
right.
happened in a while for me. I
Yep.
see the signs, and I think it's not going to happen next week. I do believe it is going to happen, and so my timeline I would say is 1 to 3 months before we start seeing data,
Okay.
and I think it's time to reevaluate your positions
Okay.
and
Well,
create some cash on hand. Create some cash on hand.
there are some contagions out there. We talked about one last week with the supply chain loans. and the First Brands bankruptcy, there's been a couple of more potential contagions that popped up over the last week. I don't have the time to talk about it this week. If I remember, we'll talk about it next week. But JP Morgan CEO Jamie Dimon said that, hey, it's the cockroach theory. If you see a
Yeah.
cockroach, there's probably more.
Yeah.
So
Yep. And
we'll see.
that's where I'm at. So,
Yeah.
all right, the perma bull is now turned bear. Here we go. All right, guys. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good
And it turned